Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, beautiful people? Good day, good morning, good afternoon, everyone, and welcome to our live stream. Today, I want to show you a couple of very interesting articles about Bitcoin, gold, and Ethereum. What is the correlation between gold and Bitcoin? Is the bull market coming to an end soon? This is the question I will try to answer with my very special guest in just a couple of minutes. Is there a correlation between gold and Bitcoin, guys? Coming up. Right, I came across a couple of very interesting articles, guys, talking about the correlation between gold, Bitcoin, Ethereum, okay, and other cryptocurrencies. And I cannot start the chat today without my very special guest, like every other Tuesday, from the heart of London, Neil Wilson, Chief Market Analyst at Markets.com. How are you, Neil?
I'm very well, thanks. Yeah, the hair's getting longer by the day, so I'm looking forward to when the hairdressers reopen.
From now on, I'm going to introduce you like this, Neil Wilson, the man that has a different hairstyle every day. No.
Not by design, though.
No? Okay. Now, we had some very good news from UK. Yesterday, the new budget was announced, and this morning we saw that the UK and the US have reached a potential agreement on halting the tariffs on whiskey and other products. Is that right?
Yeah, that's it. So the budget yesterday was had a fair bit of stimulus in it. It was really a budget where the Chancellor's really spending now to help get us through the crisis and continue to offer support to businesses. Among those, the ones that have been hardest hit, especially. But it does imply sort of tax hikes down the road. So we'll be paying it back through higher taxes over the course of the Parliament and beyond. So a bit of a mixed bag, but definitely some support in there for the economy, lots of support for the economy, and more borrowings. So there's going to be about another £50 billion of issuance next year by the government, and I mean that'll just get hoovered up by the Bank of England. So it's not really a problem for the gilts market, but it does show that the government is prepared to borrow more than the market had maybe thought. So we have seen gilt yields just push up a touch over the last day, but of course that's linked to the bond market, the global bond market. Really, we've seen treasuries also sold off and the yields move up. And yeah, the news on the tariffs is a good one. Really, it just shows that now that we're out of the EU, we're able to move forward ourselves on trade negotiations and don't need to worry about what the rest of Europe is demanding.
And this was the British dream in the last 4 years. I reckon this deserves a shot, yeah, to celebrate that you don't have whiskey anymore. Now, let's have a quick look at what Rishi Sunak highlighted yesterday. So we see a furlough to be extended until the end of September, he said. We see the government to continue paying 80% of employees' wages for hours they cannot work, which is really good. employers to be asked to contribute 10% in July and 20% in August and September to support this movement. Also, Rishi Sunak announced support for the self-employed also to be extended until September. And 600,000 more self-employed people will be eligible for help as access to grants is widened. Wow, that's really, really good news. So my next question would be, where does this leave the pound? Because considering what's happening, the path to 149 on the cable should be quite smooth, right?
Yeah, I mean, obviously we've seen a pullback, really off the back of dollar strength. The dollar's come back quite strongly and push cable back down below 140 again. I think, I still think the pound's going to be moving up. I still think the pound's got the best sort of outlook near term for growth. I think just with the UK economy bouncing back, hopefully pretty quickly this year. You say it's good news that the Chancellor's offering more support, and in some ways it is, but equally, we should just all get back to work. I think that would be the best thing for the economy, is people just to get over it and get on with it. Now that the vaccines are kicking in and the number of hospitalizations has collapsed already, I think it's single-digit numbers in recent weeks in terms of ICU, intensive care among people aged over 80. And they were the key risk group. I think we should just be moving on now. I think they should just open it all up like they're doing in Texas and get on with it.
Fair point, but the saying, better safe than sorry. On the same note, the World Health Organization issued a warning a few days ago that the COVID cases around the world are booming again, and it's the new strain of COVID. Apparently, it keeps mutating. So I agree with you, because I'm fed up with this so-called lockdown. But better safe than sorry. We saw what happened with the millions of people that got affected by COVID. Now, looking once again at the chart, I see that I have a 200 moving average. I'm looking at it on a monthly chart at the cable. Okay, 139.61 as we speak. We see a big resistance level highlighted by the 200 MA at 148.96, just 4 basis points below the 149. It's very close. It's very close, and we will probably see a retest in the next month or so if things keep going this way. What do you reckon?
Yeah, I mean, I think this is a short-term rally for the dollar. I still think the downward, the longer-term trend remains lower for the dollar. You think you're just maybe seeing a bit of this yield, the yields picking up. That's creating a bit of pressure. But yeah, I think you got to clear that high, that sort of 144.45 high that I think was from 2018, if I remember correctly.
Yeah.
And that's obviously going to be a key bit of resistance there, that horizontal sort of resistance. I think that's going to be pretty tough resistance to crack. But if it goes, once it goes, then we start to see it run up towards that 150 level.
Hey, it's very close to the 149. There's the 145. There's the 149. Right, very close. Now, the real reason why I wanted you here today, apart from having a date every Monday and Thursday, there's something going on with the crypto market, and I've discovered 2 very interesting articles earlier on. The first article, has to do with the correlation between Bitcoin and gold. Did you ever come across this kind of correlation? Did you ever saw it this way, Neil?
Yeah, I actually wrote about this last year for the Investors Chronicle. The behavior of Bitcoin and gold was actually last year was correlated actually more to risk. It had quite a close correlation with the S&P 500. And I think, it's really this idea of Bitcoin acting as a digital gold and drawing away some of the traditional demand that you see for gold into Bitcoin. And so what we're seeing is really that you're not seeing Bitcoin as as a currency per se, but as a security, a bit like gold, a non-yielding safe asset that protects you against inflation. And it seems to be that it's picking up some of that demand, particularly among younger investors who are maybe not going into gold and just putting a little bit of their money in Bitcoin. And it's this sense that, in the old days you might have kept 2, 3, 4, 5% maybe of your assets in gold, say, or maybe even just 0.5%, whatever. Whatever that number is, it's different for everyone. Charlie Munger, for example, Berkshire Hathaway doesn't invest in gold ever. So, some people don't. But say you did, and a lot of investors clearly have over the years, then what you're seeing is a certain percentage of that demand for gold getting directed into Bitcoin. And there was that research report from JP Morgan a few months back, which signaled that if you started to see Bitcoin kind of rival gold, one for one, then you could see Bitcoin up to $146,000. That was their estimate of where it could reach if demand for Bitcoin as a digital gold was similar to gold. And you have seen that particularly among younger investors. So I'm not surprised that therefore means that the price action starts to behave in the same kind of way, and it has an inverse correlation with real yields, just as gold does.
Right. Yes, makes a lot of sense. Check this out. So we are looking basically at the correlation between the price of Bitcoin and the price of gold from December 1st, 2020 to the present day. We heard that Bitcoin may be the new digital gold and maybe a hedge against inflation of the dollar, right? This is what they were trying to say. So in this example, we can see that starting December 2020, prices of Bitcoin and gold do appear to correlate in a bullish movement. And then by mid-January, we see both Bitcoin and gold starting to correlate in a bearish fashion with a bit of a pullback. By February 3rd and 4th, Bitcoin gives strong bullish buying signals, while gold sets up for a short entry, which eliminates the correlation. This is what confused me and many other people, because currently gold looks like it's trying to bottom out and ready for a short-term rally, while Bitcoin, after its most recent pullback, is looking to rally higher from here potentially. What do you think about this? Does it make sense, or is just a coincidence?
Yeah, no, I think when you're not necessarily going to see every movement tracked the same. I think the correlation is more one of from a kind of longer term thesis around the investment sort of ideas for whether or not you should be investing in Bitcoin or gold. It's more around that, I would say. I'm not surprised that the correlation, you do see price action correlation, just because of I think you get big moves in real yields, and that does affect the market, both markets. I think also it's a liquidity thing, in as much as we saw them both sell off last year as liquidity was pulled from the system because of the crisis, and we saw broad sell-off, and then they both rallied as central banks injected a lot more liquidity into the system. So I think there's a big liquidity play there, and I think the problem perhaps for Bitcoin might be that if yields do firm up, then my view is probably that the appeal of Bitcoin diminishes, just because you get a return on safe haven investments like US Treasury bonds. That said, though, the reason yields are moving up is because inflation expectations are really starting to shoot higher, and we've seen the 5-year break-evens in the US go above 250 basis points. I think the highest in about 13 years. So that movement in inflation does support the appeal of Bitcoin. So it depends why things are moving as much as what is moving.
Which takes me to the second very interesting article which I found today. Check this out. Bitcoin and Ethereum slow down as transaction values and fees plunge. And this was basically what I wanted to talk about today. So let's have a quick look at the article so everyone understands. and then we're going to go into it. So on-chain metrics for both cryptocurrencies showed a marked decrease in the dollar value of transactions and the subsequent transaction fees. Yeah, Bitcoin and Ethereum appear to be experiencing something of a slowdown, as on-chain data shows a dramatic decrease in the US dollar value of coins being sent across both blockchains in the past week. At the same time, transaction fees for both chains have receded from recent highs, or in Ethereum's case, an all-time high. Okay, now data from Bitin 4 charts shows 46.68 billion worth of Bitcoin was sent across the Bitcoin blockchain on February 25. For some context, that's around 5% of the total Bitcoin market cap, which currently stands at 925 billion. 3 days later, on February 28, the US dollar value of Bitcoin being sent had fallen to 1538 billion, a 66 drop-off. And in the same time, the average transaction fee for Bitcoin users fell by 53% from 31.47 to 14.63. Yeah. So the highest average fees ever recorded for Bitcoin came in December 2017, when Bitcoin fees exceeded $55, marking the end of coin's bull run for that period. There is a similarity to what is happening now. What's your take on it? I mean, and we see many times that the same address. Yeah, we saw an article last week that a huge amount of Bitcoins was transferred from the same address in December, and then again the same address in February. What is this? Because I'm trying to understand. Is the market calming down? Is it melting?
Well, I think it's definitely got a new level of maturity in terms of the institutional activity that's going on there. I think there's obviously a lot of kind of things that go on in the darkness, if you like, in the shadows of Bitcoin that I certainly am not privy to. I don't know all those ins and outs. And it's hard to know exactly what's going on, and that sort of goes into the point of why I think it's a risky place to be and why it's a manipulated market. And I'm not convinced that what we see on the surface is all legitimate and clear cut. So it's always tough to know what's happening with Bitcoin.
Volume, basically, and such a sizable slowdown in activity on both blockchains could be interpreted by some as a sign that the current bull run is grinding to a halt.
Yeah, I mean, I think activity plays in. Obviously, the activity levels plays into the price with potential future price action. So there's maybe just a bit of buzz come out of the market. I'm not sure. We've certainly, there was a lot of buzz at the start of the year with clients at markets.com and it's not quite there anymore. Maybe it's just because the meme stocks have taken over and they're the next big thing, and so everyone's trading that instead.
Well, GameStop once again.
Yeah.
Right. Now, what else is going on? Right, tomorrow, NFP. I promised we're going to talk about NFP. Earlier on, we had the initial jobless claims coming out in green at 745,000, still below the 750,000 expected. Tomorrow is the NFP day. The ADP numbers yesterday showed 117K versus 177 expected. 182,000 jobs are expected by consensus tomorrow versus 49,000 last month. What's your view on it? Just a shake-off on the dollar, or the downtrend continues, Neil?
Well, I think now we've got the we sort of know where the Fed is on jobs. We know that the Fed is not going to take its foot off the gas just because the economy is heating up. We know that they want the jobs market to recover. So the implication that a really strong jobs number could force the Fed to tighten conditions a bit sooner than the market previously thought, I think is now not really a problem. It's not really the case. We know sort of where the Fed is, and I don't think it's in a position where, with 10 million jobs lost since the pandemic started, that a really strong print is going to necessarily do much. Had that said, though, I think if you get a good strong print, then it does suggest the US economy is doing a bit better, and that does suggest that maybe there could be some dollar strength. But if the economy is picking up whilst stimulus is still there, whilst the Fed's anchoring the short end of the curve, then you start to think about inflation, and you also start, if you see the Fed, and we've got Jay Powell speaking today, potentially trying to lean on the long end of the curve, then that could force up inflation even further. So you could get a situation where you start to see this kind of unanchoring of inflation expectations, which I think we're already seeing, and a strong jobs number would support that. If you get a weak number, then you probably think it's just the case that the economy just needs a little bit more help, and it's not really going to massively affect the market, I don't think.
You know what's interesting? Now we're gonna have Jerome Powell speaking tonight, but they all want a cheap dollar, and the events that happen in the US, because they have a heavy winter. The events that happened in the US last month, I don't know if we're gonna see big growth, big job growth this month, purely because Texas was frozen for weeks, and we had many areas in the states that faced a lot of issues. Obviously, people were left out of work, out of electricity. So all this, I think, will add up to the data numbers the job numbers that we're going to see tomorrow. Sorry, I'm getting confused. So I don't know too much about a strong dollar, but once again, we're going to see what's going to happen. Right, Neil, thank you so much for today. It's a short one today because we're very close to the US market, and I want to go to the Bitcoin. And I'll talk to you on Monday. Yeah, let's see how the NFP will affect the dollar tomorrow.
Yeah.
What's the direction? And Monday we're gonna get a new direction of the market.
Okay, great.
Sweet.
Catch you then.
Thank you for your time today. I'll see you on Monday. Take care. Right, guys, we had Neil Wilson with us from the heart of London. I'm going to take a 30-second break, and then we're coming back live with the charts of the day and the signals of the day, guys. We're only a few minutes away from the US markets open. Stay tuned.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, what's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How are you guys doing? Let me know how you're doing. And if you like what you see, like, share, subscribe, and support us in delivering more great content. Be supportive. Don't be haters. Now, let's get down to business, guys, and see what is happening on the markets. Thursday, 4th of March, 2021. The $1.9 trillion stimulus bill will pass through Congress very likely over the weekend as Congress members stall. Crude oil is under pressure today with the OPEC Plus meeting on the radar, and the US dollar index is waiting for the Fed Chairman Jerome Powell to speak at 1900 hours GMT plus 2. The United States and Britain have reached an agreement on suspending tariffs on Scotch whisky. The Spectator magazine reported earlier today. And Bitcoin, guys, is still steady at 49,500 as transaction values and fees plunge 70%. Ethereum follows, of course. US markets open coming up. Right. Good morning, America. Good afternoon, Europe. Once again, we're exactly 4 minutes ahead of the U.S. Markets open. Let's have a quick look at the economic calendar, guys. See what happened today. We had quite an eventful day in the economic calendar. We started nice and early with the ECB economic bulletin. Okay, 10:30 GMT plus 2. We had the IHS market construction PMI from Germany, which came out 41 on the dot. Then we had the construction PMI on the British pound, which came out higher than what consensus was expecting, 53.3 versus an expectation of 51. We had a tentative of an OPEC meeting. Still, no information was released. Probably they are still in the meeting. Then we had some announcements in the Eurozone. We had the retail sales, which plunged 5.9% versus an expectation of a negative 1.1% from consensus. We had the unemployment rate in the Eurozone, which came out just as the previous month, 8.1% versus an expectation of 8.3%. Now, let's see if that's going to be revised or not. And meanwhile, we had the initial jobless claims, guys, coming out at 745,000 jobs versus an expectation of applications, versus an expectation of 750,000 with a negative non-farm productivity of 4.2%, a bit better than one consensus had predicted, a negative 4.7%. We also had the unit labor costs, which went down to 6%. Versus an expectation of 6.6%, and the previous, which was a negative 9.7%. Now, we're going to have the factory orders to be announced in exactly half an hour from now, and then we're going to have the Federal Reserve Chairman Jerome Powell holding a press conference. Let's see what that will do to the dollar. Now, let's move on. Let's have a quick look at a very interesting article. And then just as the markets open, guys, I want to head on straight to the charts and show you how the markets open today. So, U.S. futures edged lower. Jerome Powell's speech in focus today. Let me just sniper these pop-ups. Right, there we go. So, U.S. stocks are seen weakening at the open today, continuing the previous session sell-off ahead of a key speech from Federal Reserve Chairman Jerome Powell. The Dow futures were down 60 points in pre-market open, or 0.2%. The S&P traded 12 points, or 0.3% lower. And the NASDAQ 100 dropped 50 points, or 0.4%. So negative opening is expected. After yesterday, Wall Street closed in the red with the tech-heavy NASDAQ composite dropping 2.7%. The S&P 500 losing 1.3%. And the Dow Jones Industrial Average outperforming, losing just 0.4%, but they did close in red yesterday. Now, the prime driver for this weakness in the markets was a surge in bond yields as the benchmark 10-year U.S. Treasury yields rose to 1.49%, almost 1.5%, before stabilizing around 1.47. This is not quite at the one-year high of 161 set last week, but still increases worries over potentially stretched equity valuation, as these have been supported by expectations of a prolonged period of low interest rates. With this in mind, Jerome Powell's speech at the conference will be studied carefully to see if he continues to downplay the rise in yields or not. Adding to the uncertainty on the markets has been data pointing to a slow and uneven economic recovery, particularly in the labor market. Yesterday, we saw the release of an unexpectedly weak private payrolls report, bringing the weekly jobless claims figure into focus later today, ahead of Friday's closely watched official employment report, or the non-farm payroll report. On the earnings front, guys, we have BJ's Wholesale and Kruger reporting before the open, and Broadcom, Costco, and Gap will report after the closing bell. Oil prices were largely unchanged today, with traders waiting for news from the meeting of oil top producers, the OPEC Plus, over output levels going forward, particularly given Saudi Arabia's surprise announcement in January of a unilateral cut of an additional 1 million barrels per day. We saw that Russia wasn't really happy with this, so today they are in talks. Let's see what will happen. We're going to get the news as they come out, and we're going to serve you the news fresh from the oven. Now, guys, charts of the day, signals of the day. We are exactly 1 minute ahead of the U.S. markets open. So I tell you what, Allow me 30 seconds to catch my breath. And then we're coming back live with the charts of the day, the US markets open, and the signals of the day.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, welcome to the US Markets Open. The markets are opening as we speak. And I'm very, very curious to see what will happen today at the US Markets Open. We saw crude oil WTI rallying a few minutes ago, guys. It's currently trading at 62.30, 62.27. We see a bit of a correction starting, but we saw a very nice engulfing candlestick, okay, that rallied in the last hour or so. RSI stochastic, a bit of uncertainty between RSI and the stochastic. Yeah, we see a divergence with the RSI pointing downwards and the stochastic pointing upwards. So probably there is quite a bit of pressure on the market from news that should come out any minute now from the OPEC Plus meeting. Moving on, we're looking at the euro, which tanked today during the European trading session. Not as much as I would have wanted, guys. 120.37 for the euro this afternoon. Still subdued by all three moving averages. Not a lot of volume in the markets just yet. RSI stochastic somewhere crawling in the oversold levels. Okay, let's see what will happen. Probably investors are a bit cautious now ahead of Jerome Powell's speech. That's why you don't see a lot of volume in the markets, guys, and a lot of trading going on. But be rest assured, in a couple of hours, as we get closer to Jerome Powell's speech, things will start picking up. We're moving on to the cable, guys. We're looking at the pound, which is currently trading at 139.80 this afternoon. It's breaking through that 200 moving average. There is great potential to the upside for the pound this afternoon. And if that's the case, probably traders will aim for a 100% correction. Okay, so probably they're going to try and aim for the 141.67, 141.50 to the upside. You can even get the Fibonacci retracement tool out if you want, guys, and try and measure the retracement. Okay, if you want to calculate your entry and exit a bit better. Now we're moving on to the USD JPY, which after rallying the entire European trading session, guys, is currently trading at 107.41. And it should correct just a tiny bit. Keep an eye on that 107.20, where that 20 moving average is, for a bit of a correction on the USD JPY. RSI stochastic almost off the charts in the overbought territories, indicating a potential correction on the asset. The Aussie dollar, very undecided, still subdued by that 200 moving average, the red line which you see on the charts, 0.7793 this afternoon, with the RSI stochastic somewhere in between overbought and oversold levels. Still dragging. Not a lot is going on ahead of the press conference from Jerome Powell. USD CAD, on the other hand, 126.23 as we speak, guys. We saw a negative opening, still very shy. There we go. Right, negative opening, a big spike at the open. We see the RSI stochastic close to the overbought levels, indicating a potential continuation of the downtrend for the USD CAD, especially if you look towards the left-hand side and you see this amazing rally that happened a couple of days ago. Okay, then this correction makes a bit more sense. Let's have a quick look and see how the S&P 500 opened this afternoon, guys. It opened to the downside, but is pushing higher as we speak. 3,835.50 for the S&P 500, with the RSI stochastic turning around from overbought levels, pointing upwards. We're going to have a look at the signals in a minute, so don't go anywhere, guys. Dow Jones, positive opening for the Dow Jones, and quite a bit of a push. Let's have a look at it on a 5-minute chart. There we go. It opened somewhere down there, guys, and it started pushing higher straight away. 31,419.82 for the Dow Jones Industrial Average. Now, what else opened on the positive? We're looking at Apple, which opened to the upside, $123.19 as we speak. Amazon opened to the upside as well, $3,045.59. Nvidia, very shy this afternoon. A positive opening, but still very, very shy. And if I'm not mistaken, that retest of the 50 MA will continue the downtrend for Nvidia. Right. Okay. We have some comments. Thank you for your comments, guys. Good afternoon and welcome. If you're struggling with anything, feel free to type your comments and I'll do my best to help. Right. So Nvidia 516.86. No, I was right. Still, we need to keep an eye on that 50 MA, guys, on 51801 as a benchmark and see where do we take it from there. If it's going to break that and settle above, then probably we're going to see a retest to the upside. If not, we're going to see a continuation of the downtrend. Meanwhile, we're moving on to the US dollar index, currently trading at 91.18. Downturn for the US dollar index. We might see a retest of that 200 MA to the downside. We see the retest of that 50 MA as we speak at 91.11. Okay, with the RSI and the stochastic both pointing downwards, indicating quite a bit of selling power on the US dollar. Right. Okay. Now, what do we know? Usually when gold goes down, when the dollar goes down, gold price goes up, guys. However, in the recent trading days, we saw gold not being able to settle above that red line, that 200 MA, and is currently trading at 1,713.60. Okay, again, nothing is really happening with gold. It's been trading sideways for quite a few hours now. We are waiting for a boost, for a catalyst that will probably be offered by Jerome Powell in the next 3-4 hours. Meanwhile, we're going to move on to Brent oil futures, or the UK oil or the European oil, guys, which if we look at it from a technical point of view, we're seeing it rejected by that resistance level around the 65.60, 65.50, somewhere in that region, and it's currently trading at 65.15 with both with the RSI pointing downwards and stochastic still undecided, guys. So technical traders, take a breather and allow the markets to settle a bit. Silver, on the other hand, is copying gold. Nothing really happened with silver in the last few hours. 26.17 for silver. And again, RSI stochastic still undecided. The RSI did not manage to trade above the 50% mark, indicating an uptrend. It's not pointing downwards either, indicating a downtrend. So everything is waiting most probably for Jerome Powell to speak. Now, let's have a look at Tesla, guys, which, funny enough, is tumbling in the last couple of trading sessions. $662.70 for Tesla this afternoon. We see a, let's say, positive opening. We see it trying a support level there. Okay, at 648, 650. And we see the RSI and the stochastic both in the oversold levels, indicating a potential correction at least to the 20 MA. Yeah, at least to 685, if not a bit higher, to 704, where that yellow line is, where that 50 MA is. Let's see. Now, meanwhile, everyone's favorite, guys, Bitcoin started picking up a few minutes ago as soon as the US markets open. I don't know why it reacts like this. It's not capped by the US markets open, nor the European markets open. It's currently trading at $50,318. Okay, with the RSI stochastic, in case technical analysis makes any sense in trading cryptocurrencies. We see the price, we see the candlestick formation settling above that 200 moving average. Okay, but on the other hand, if we were to look at it from the technical point of view, we see the market not being able to create higher highs or higher lows, which again might lead to a bit of selling power. It's a key point, guys. It's a key point what's happening here. In cases like this, once again, you could get the Fibonacci tool out and measure the retracement. However, be aware, be warned. Technical analysis doesn't really mean much when you're trading cryptocurrencies, as most of them, as all of them, let me rephrase that. All cryptocurrencies are driven mainly by the news. Quick look at Ethereum, which is mimicking Bitcoin's movement, 1,996.70 for Ethereum this afternoon versus the US dollar. Again, with potential to the upside as the candlestick formation settled above the 200 moving average. But you know what it takes for all this sandcastle to tumble? one simple news. That's it. One tweet, one news, one article from someone, and this sandcastle might tumble in just a second. Right now, I don't want to hold you for too long, guys. Let's have a quick look at some trading signals offered by investing.com. In the same time, if you need more trading signals, guys, our partners at markets.com have an amazing web trading platform that shows you the trading signals straight on the platform, so you don't have to flip between websites and so on. So you might want to have a look at that. It's very, very easy. All you have to do is go on markets.com and open a demo account, and have a look at their online trading platform, on the web trading platform. Right, now we're going to start with the euro US dollar, guys, which is seen as a strong buy by investing.com shortly after the US markets open. The daily and the hourly remain a strong sell, though, so I would wait a bit more for the markets to settle if I'm planning to trade the euro US dollar. In the same time, we're looking at the cable GBP USD with 4 strong buy indications. The USD JPY pair, which has been rallying for the last 2 or 3 days, has a very shy sell position, which is a minor correction. And then we see 3 strong buy recommendations on a 15 minutes hourly and daily charts. USD CHF remains with 4 strong buy recommendations. The euro versus the pound, guys, very, very interesting. The euro GBP is in a strong sell for the last 3 days or so. USD CAD is in a strong sell as well. Okay, so 4 strong sell recommendations for euro GBP, 4 strong sell for USD CAD. Kiwi dollar strong buy recommendations on 5-minute and 15-minute charts. Nothing is really happening on the daily chart as the signal remains neutral. Euro JPY strong buy recommendations after the US markets open. Euro CHF 4 green with 4 strong buy. And the pound versus the JPY and the pound versus the CHF, once again, 4 strong buy recommendations on all 4 time frames. Right, let's have a quick look and see what's expected from commodities this afternoon, and then I'll give you a hint on stocks, guys. Gold, once again, 4 red for gold, 4 strong sell recommendations from investing.com. Silver is neutral. Yes, sell on a 5-minute chart, strong sell on the daily, but nothing is giving us a hint somewhere in between. Copper open to the downside, the strong sell after the US markets open, with the daily remaining a strong buy. So there's quite a bit of divergence there on the direction of copper. Crude oil, WTI, and Brent oil, guys, neutral. And very shy signals on a 5-minute chart, but the hourly and the daily remain a strong buy, which gives us a bit of hope that crude oil might reach, once again, 70, why not $75 if OPEC Plus decides to open the tap. Natural gas, on the other hand, 4 red for natural gas this afternoon, 4 strong sell recommendations, and US wheat, guys, is neutral. Now, I said I'm going to give you a hint on some stocks, guys. Let's have a quick look at the Wall Street stocks and see what's worth buying or selling through investing.com's eyes today. ExxonMobil, guys, with 4 green this afternoon, 4 strong buy recommendations. Apple opened to the upside with a strong buy, but the daily and the hourly, the general feeling remains a strong sell. Microsoft, strong sell as well with a neutral recommendation after U.S. markets open. Procter & Gamble, 4 red with strong sell recommendations. IBM is supposed to strengthen today with 4 strong buy. Johnson & Johnson, guys, 4 red for Johnson & Johnson. Bear with me for a second. Let's have a quick look at this one. As it's very, very interesting what's happening. Wow, what a tank for Johnson & Johnson. A day or 2 days after everyone announced that Johnson & Johnson got the emergency authorization from FDA of the first single shot anti-COVID vaccine. I'm wondering what's triggering this sell-off that sent Johnson & Johnson share price down to $155.44. Right, okay. Moving on. General Electric, guys, JP Morgan, AT&T, and Chevron, they all indicate 4 strong buy recommendations, and Intel and Cisco indicate a strong sell. Right, Bank of America is neutral with a daily on a strong buy, and Goldman Sachs green all over the chart with 4 strong buy recommendations. This is it. This is what's happening in the markets today, guys. Amazing day, amazing movement in the markets, but Keep an eye on the US dollar, guys, as the Federal Reserve Chairman Jerome Powell will have a press conference in exactly 3 hours from now. This is it from my side. Join me again tomorrow, an hour earlier than today at 3 o'clock GMT plus 2, guys, just 30 minutes ahead of the non-farm payroll announcement. This is it for today. Remember to trade responsibly and may all your trades be in the money.